First and foremost, I wanted to make some comments about the market. I had a question the other day, and it regarded the what a liquidation break is and overnight inventory, the implications of overnight inventory. So I want to just cover that quickly because this is something I often talk about, particularly in the morning in the tweets, and I find that this is very, very useful to trade during the day. So often I'll say overnight inventory is long or short or it's mixed. So those are the most near-dated traders and kind of the weakest hands, if you will, the people who are kind of just into this trade. So if you think about the market as a store, as in it is an auction place, you would think about inventory in the store being overly long or overly short. And if you have all the overnight inventory long, they need still higher prices to be rewarded. And if they get lower prices, they may pull their money quickly. So if you have overnight inventory that's 100% net long, if they don't get their move immediately, there's often a liquidation break to rebalance that inventory. It's often a opening gap fill, if you will. So what I look at, for example, is if inventory is very net long and you have a opening high, a RTH high, that is lower than the overnight inventory, and then you take out, let's say, the opening 5 to 15 minute low, you're probably going to have a liquidation break lower. The same thing with a move lower in the morning. If you have a gap that's low, that comes down, but it doesn't eclipse the overnight low, you often have a rebalance higher for that kind of the gap fill up higher. So I often look to see, is overnight inventory correct? Are they wrong? And then I trade accordingly. The most powerful allies that you'll have in the stock market are, how do you know the degree of how long or short the overnight inventory is? Good question. You look at it in relation to the previous day's close. Was all the price action above or below that close? And you'll know how heavily net short or how net long the overnight inventory is. So that, to me, is very, very important. And if you can get a beat on that, you'll save yourself so much. Even if you don't make money on it, you'll save yourself a hell of a lot of money making mistakes. But I will say this. All gaps are not created equally. There's a big difference between a 5-point gap and a 50-point gap, for example. There's a lot to do also with the breadth and the internals of the market. If you have 1-to-1 or 2-to-1 negative internals versus like 8-to-1 or 12-to-1, which it becomes more like those trend day types of situations. And when you do have those big, kerplunks, they don't tend to come back right away necessarily. So keep in context in mind. They're not all created equally. I'm talking about sort of the smaller variety type of gaps. Now, what is a liquidation? So the liquidation break. Often you'll get a move up, and you won't get that excess in the auction. If you look on my YouTube video through my channel, I have a special edition video, and it's the basic look, the market profile basic look. And I don't go through the TPOs because I think that would be a little bit too complicated for most people. I wanted to keep it really kind of for dummies, if you will. But if you picture a bell curve, and this is really a market auction. This is your typical bell curve. You have your, so on and so forth. If you just put this on the side, this is what a good stock market auction should look like. You have excess on the top, excess on the bottom, and most of the trade sort of in between. This is sort of like if you were to get if you wanted a textbook look of a market profile. But if you have one of those tails on the elongation, either here missing, like up here, let's say it's cut off, or on the low it's cut off, that becomes a poor high or a poor low. And if you have a poor high, often that doesn't correct right away. There's often a liquidation break first because remember what I said about the last buyers not being rewarded if they can't make money, but it's sort of like a shark swimming. That is momentum. If you cease to swim, you die, they asphyxiate. So the same thing goes for momentum trading. When you don't have the next person, the buyer behind you, willing to pay more, there's often a quick sell. They hit the button, and once in a while you'll get a minor liquidation break, but sometimes they can be quite large. I've seen liquidation breaks that can last, for 50 points. Often a liquidation break triggers more selling. It depends also on the structure of the market. Did you go up in a kind of even way? Was it up in leaps? Is there a lot of foundation below that price? So often if you get that initial disappointment, it could trigger a heck of a lot more if the structure going up wasn't good. If there's more interest in this, I can cover this more in a later video, but I don't want to cover too much more of it now because I have to get out of here soon. So let's cover a couple of quick things. So we covered the liquidation break and the overnight inventory. And this is another big thing in the market. I'm sure I'm going to lose a ton of followers on this whenever I start talking any type of politics. People flip out if it doesn't go with them. Just let's take the political situation here from the point of just making money. Let's forget about ideology for a moment. The same people, all the news media, for the most part, is very, very biased. They do not like our new president. They hate him, actually. They have been wrong about him the entire time. I, on the other hand, had predicted that I thought he would win and that I thought it would be good for the stock market. Forget about if you like him, if you like his policies or not. My analysis of it was correct. My analysis still is that it is positive for the market for the following reasons. And by the way, don't look to somebody who's been wrong the whole time to now all of a sudden be right. Look to the people who have been right. He's talking about repatriating money, allowing companies to bring in money overseas, and they can use that money to either, we'll see what the repatriation plan is going to be, but I'm assuming they'll either be able to buy back stock or pay dividends. I'm assuming that money would come in at a higher tax rate, but more importantly, what I think he's really looking to do is for that money to come in and be used to hire American workers and to invest in people's businesses, their property, plant, and equipment. That investment will be ginormous for GDP, gross domestic product. And remember, we have become like Stockholm syndrome, where we've fallen in love with our captors here and have gotten so used to this easy money from the Fed that we've been willing to overlook only being a 2% growth. President Obama, whether you liked him or not, and I think he's a great singer and dancer, but he never eclipsed a 2% economy his entire time in office. It's a very long time. It's the longest stretch, actually, in American history that I'm aware of, at least in modern times since post-industrial revolution, that we have never had a year of more than 2% growth. It's very, very weak. Just the idea of getting back to growth, keep in mind, growth is like crack for the market. It loves growth. That is very important. The other issue, and possibly one of the most important ones, is tax reform. That is an immediate boost to the bottom line of companies. They can make more money if they're being taxed less. It makes projects that were previously not feasible. This is all net positive for the market. And I kept on seeing on TV and on various networks, I don't want to single just one out, but they kept on saying, oh, he's focusing on this immigration order or whatever, he's not going to do tax reform. I tweeted out that he was in an interview with the Christian News Network and that he said he expects the framework or the structure for tax reform to be on his desk in the first 100 days, and I'm guessing it's going to be a retroactive tax reform. This was ignored by the media, and they put their negative slant as they do on everything. Ignore that nonsense. This is why the market is up. This is why it is going to remain a buy on dips, in my view, because the underlying structure to the market is improving. The growth is improving. The repatriation is coming. The tax reform is coming. It doesn't mean that the market can't have pullbacks. There could be a 10% correction at any time. But the backdrop, the macro backdrop here is improving. So that's someone asked, can tax reform has to go through the House and the Senate. Can it get, yeah, of course it can get through. The Republicans have majorities in both the House and the Senate. If they just vote straight on party lines, it goes right through. It's got to happen. Republicans, whenever they come to power, always want to. There is no impeachment. Someone just asked, is there a black swan? I know that the Dems are talking impeachment. As long as the Republicans have control of the House and Senate, there will be no impeachment. Just forget about that. It's a waste. It's not even a discussion worth having. It's just media hyperbole. So that's the deal. I want to dispel this stuff because I think people have not understood the quote-unquote Trump trade, and that's why they've either been fighting it or missing it. You should see. I mean, one day maybe I'll open up my DMs. I'll just put my hand over some of the the names so people aren't embarrassed. But people are just like so ideological politically that they have. I think they're probably getting their heads handed to them. So just focus on. Don't focus so much on the why. Focus on the what, if that makes sense. This is to me very important. Let's talk about some other stuff. So you had this major smackdown in Gilead Sciences yesterday. That is one I've been looking to buy, but it's sort of like not today. It's sort of like my little joke with Gilead is it's sort of the little orphan Annie. I'll love you tomorrow. You're always a day away, and it remains a day away. Where could this stock go at this point? That's going to be an interesting answer, and I don't want to freak anyone out because the price that I'm looking at is probably a lot lower than people are betting on. Let's just say this: there's a reference low currently at about 63.50, but there's a big 61.8 Fibonacci retracement of the entire move at 57.78. I will be an aggressive buyer at 57.78 if it is to get that low. I don't know that it will. I don't know that there won't be bounces before then. But as we start coming down, I'll probably start doing what I usually do, selling puts and maybe buying. The stock on a bigger, longer-term play has a huge head and shoulders, a big rounded topping pattern. I mean, granted, it's been cut in half, but the stock, the overall pattern of the chart seems to me that this stock is probably peaked for quite some time. And a lot of people keep talking about how cheap it is on a PE multiple basis. The problem is that their earnings might be in an issue, peak earnings. We're talking now also part of the Trump trade, and I think this would have happened honestly under both Democrats or Republicans, is they want to start negotiating drug prices, which means their margins are coming down. The same thing happened with Lockheed Martin, peak margins. So that's why all of these stocks have been rather soft. They haven't been performing well because they're not going to be able to earn as much going forward in the future. So at some point, yes, there is a price, and for me that price will be 57.78. So we'll see how that plays out with regard to the Gilead. They also have an issue. And this is I don't want to sound too conspiracy theorist, but if you think about it, it'll make sense. What Gilead is being punished for is for actually curing hepatitis C, that they get a lot of money, and of course that initial, it's like new technology. When you first buy, remember how expensive personal computers used to be, or cameras used to be, digital cameras, or anything. When it first comes out, it's expensive. There's a new adopter fee, but after multiple iterations, it gets a lot cheaper. And they have cured Hep C, so they don't have a customer for life anymore. They, have someone who spends a lot of money up front, and that money is coming down, that margin is coming down, and they don't have them as a recurring patient model. Now, this is where I want to diverge a little bit. Think about the cancer industry, and more people work in the cancer industry than actually have cancer. You think they're ever curing cancer? I don't want to get into it, but that to me is one of the reasons why you've never had a cure for cancer, because these companies make so much damn money treating people for that. I mean, in New York, they just added on a couple of wings to Sloan Kettering. So it seems to me like an industry that's going to be thriving for quite some time. let's get into the list of things you guys wanted to talk about. Nvidia, let's just do it, right? That's what everyone wants to talk about. They are down a little bit after hours. It had been down a lot after hours. Let me go into the overnight chart. 1 day, 5 minute. This thing had plunged to as low as 107, which was close to the consolidation channel low, which is around 106.30. 111.92, to me, if you're still long, I wouldn't want to be long below that. On a daily chart, 9 months, someone asked me how low I think Nvidia could go, and my answer was really the channel low to the 50 MA. The 50 MA is 104. Maybe it keeps dribbling down to 100 or something, but this area to me seems like it's going to catch it, at least for the options expiration. This now was a look above range, and I'm using, I shouldn't even say a look above. It was technically a bit of a look above and fail, because you did eclipse the old high, which is, if you remember my weekend video, and if you remember what I've been saying during I tweeted this out, I thought that we would come up and eclipse it a bit, but after that, to me, it got a little bit more iffy because it had run a lot. And I either thought this thing was going to be some type of a blow-off gap up top or a pullback low. The problem now is that you can have a lot of conversations, and I just know how traders think, that there's either a double top in place here or that this was a look above and fail, and now that it was a look above and fail, it needs to come back to the low end of range. When you peak above a range and it fails, you tend to articulate back to the lower end of the range. Right now, the lower end of the range is in the 99s, 99.38. If you lose 99.38, that will be a confirmed double top, and I think the stock would be a sale probably on rallies until you can eclipse those tops again. So let's see. It's not a confirmed anything yet because you haven't taken out the swing low in between, but it's a little iffy. I do think that the first go round, at the very least, the 50 MA will be a buy for a bounce. And this thing, to me, honestly, it doesn't even look like it's holding down so much. I wouldn't be surprised to see if this even went green tomorrow. So what I think we're going to have to do, unfortunately, is 1 day, 5 minute. Let me go back to the 1 day, 5 minute. Is we're going to have to see how this trades during the regular trading hours. Remember what I talked about earlier with overnight inventories? This goes for these types of stocks also. So let's say you open up tomorrow and you open up, let's say roughly where we are here, and then you take out the opening 15-minute high RTH. That could be a long. If you take out the 107, it will probably continue lower because all of the people who bought the dip in the after hours are wrong, so they get slammed. The initial bars high was 117.65. I tend to be a little bit more conservative. I'd really want to see that 117.65 clear and hold as a long for a move up, as opposed to kind of guessing it. So that to me would be the key. That spasmic bars range below 107 to me is going to be probably have more liquidation to the 50 MA at the very least, and above the 117.65 to me would probably be a long in no uncertain terms. All right, Starbucks. I had been playing Cafe quite well. I haven't really looked back after my sale. I had taken a smidgen of heat on that, and then it really worked out, like for 2 days, and it really was nothing. That was even, quote unquote, part of my business plan with it. But it worked out really well. I haven't looked back. As far as Starbucks goes, this looks like it could have formed a bit of a head and shoulders top. It's kind of playing around the 200-day moving average, and it's had a couple of look above the channels that have failed with lower highs. I'll keep it simple with this. If you want to be long, you want to see it close and hold above the 200-day moving average, and probably honestly get back up above the 50. To me, this though, it's now in this leg has lower highs and some lower lows. I'm a little cautious with this. I think it's a very precarious pattern. I don't like it as much as I did when Schultz was there. I don't like Schultz's politics or even him personally so much. I've seen him interviewed, but I think he's a heck of a CEO, and the company is not as good without him. I'm sorry, it just is what it is. Tesla. So we talked about this getting up to 265. It's above there. This is a very simple story that I have discussed many times in videos past. And it is this. The story of Tesla has nothing to do with their cars, although they're fantastic. It has nothing to do with their very cool CEO, and Elon Musk is super cool, right? It has nothing to do with the power walls or the whatever the hell they're building. It's a simple function of stock market mechanics. No, someone asked, oh, is it a cult stock? It has nothing to do with it being a cult stock either. It's a simple function of three things. One, a high consolidated insider ownership, meaning Musk and his gang own a hell of a lot of the stock. Two, there's a very high short interest on the remaining shares that are outstanding. And three, it is poorly distributed, meaning it doesn't have a lot of institutional ownership. It's highly consolidated. Again, that's what I mentioned. Whenever they want, they can put the squeeze on the shorts quite viciously. And this stock has had these moves before. It is, however, through the downtrend now, which is good if you're a bull on the stock. The last time this thing had one of these types of runs, it ran up from 140, 105 all the way up to 269. So like over $120 move. That's almost $130 move. That's a lot. We're getting close to a kind of similar type of a move. I do think that there could be a move up to the old all-time high in the stock. But I will say this, above 265, I think it's time to start booking some profits. In the past, the Wayback Machine, 265 has been a very, very hard level for the stock to maintain. I'm not saying, like I said, it can't go to 286, but what I am saying is that 265 ain't as good as 180. Coming in after multiple days up, multiple squeezes into the number. So even if it is a pop, it could be like a pop and flop if it gets to the old all-time high. I like the idea of booking some profits into the print, particularly if it keeps running. If there's some type of a larger pullback ahead of the number and they report on 222, so there's plenty of time, I'll start thinking maybe the shake and bake. Meaning if it came up and it comes down a hell of a lot quickly, then I think that we would get enough of the froth of the move out to do it. I'll tell you this, if it before earnings it gets up to the old all-time high and gets through the old all-time high, I might even play for some type of a pullback, because I would say that, you know what I always say, when it comes up from the bottom, I think it'll be a lot of people chasing at the exact wrong time, and they could get themselves into a world of pain. Apple. So Apple is behaving quite well. Couple of things to note about Apple. It is through the channel high here, which is a lot. It's come up from the bottom. It is getting close to the 2 times range measured move and the old all-time high at 134.54. So I like the idea of booking profits into the old all-time high. We're getting close. Could it make a new all-time high? Sure, why not? But I think in stages, and I think that it might be time to book some profits into the old all-time high. As long as the stock is over 130.49, though, the path of least resistance will remain higher. That is the earnings gap high of day. And I use earnings gaps ranges as guides. Once you're above the high, the stock should go higher. Once you're below the low, it could have problems. Another earnings gap one that I was watching is this BABA. This is in a precarious range here. Today was a doji. It held for the most part yesterday's big rally. So I like the idea of buy stopping it over today's high as a long or tomorrow below the low, I'd like it as a right or right out short for a play down to the lower end of range. But I don't think you're going to really see a lot of movement out of this until it either breaks 99.94 or can clear the 104.57 so it can get its way back up to 109. This stock does not like to make it easy. It likes to be very choppy, but I like today's doji as a guide. Long above, short below, right or right out. Keep it simple, stupid. Expedia reported earnings after the bell, and it had run up, and now it is down. So if you go back to my video from, I don't know, a couple of weeks ago, I think it was exactly a couple of weeks ago, we talked about this being the Costanza trade, meaning whatever Expedia does, you want to bet the other way for Priceline. Like if Expedia is up big, you probably want to be short Priceline for their earnings. If Expedia is down big, you probably want to be long Priceline for the earnings. So Expedia here is really, wow, all over the place. It's actually now back up a bit. Holy cow. It had a look below the low that failed. It now had a look above the high that kind of failed. Gee whiz. This is just a total mess after hours. I think the key to this tomorrow might be the opening 15-minute to hour range and playing maybe in the direction of the move above or below that. I think I might need to listen to this conference call to make the call. You have opposing tails. 126.94 was the after hours high, which it seems to be chugging up. The move is starting to look like it might be higher. The initial spasm high was 123.29, so as long as you're above that, I think you could be long. If you started, in my view, now to get back below the 200 MA on this is the 5-minute, but I usually like to use I guess you could use the 5-minute. If you start getting below that 200 MA and the 20 MA on the 5-minute, it probably is going to go lower. Priceline. How is that behaving itself after hours? Wow, it's actually down. Is it down a bit? I can't tell. No, it looks like it came back. It looked like it had the initial move down, and now it's back up. So if Expedia, unfortunately, doesn't... I was really hoping for Expedia to be a definitive move. Now Priceline is up a lot, right? So it looks like the move is going to be up. So if they gun Priceline into the earnings, it might be an opportunity to take... to either try it short or I would definitely use to book profits. The Priceline 1.618 Fibonacci extension, do I not have it on here? Yeah, is almost up at 1800, 1799. So that's sort of like my longer term upside target for Priceline. We'll have to see how that plays out. So let's couch this till the weekend review until we get a definitive direction on Expedia. I'm going to star that and circle it here as a setup. I'm going to skip a couple of these because they're not ones I'm as familiar with, and I want to keep the video shorter. Goldman Sachs. So I'm kind of okay with all of these bank stocks as long as they hold their 50-day moving average. To me, this looks like a consolidation pattern. What I liked about Goldman was that it bounced off the channel. It broke out of the channel, it came down, and it bounced off the backside of the channel and is now kind of coming up. If you were to lose 227.05, which is the last swing low and that retest of the channel, the stock is going to be a short, probably potentially even down to the 50% fib is my guess. Which would coincide with the channel low. It might not be a pretty move, but it would be a move nonetheless, and at least a gap fill to 211.75 where I'd probably cover half. That's also will be the 100 MA, and then I trail my stop down. If you can get through the old high of 247.77, it's probably going to go higher. If you're currently long, just keep riding the 50 MA, and if you lose it, I would book at least the very least half of the position. Same kind of stuff. I was looking at Wells Fargo actually today because that hasn't moved as much. I mean, it has, but it hasn't, if you know what I mean. It could come up a lot. It had been down. It had washed out a lot. Again, the 50 MA seems to be the key level there. If you lose that, you might get a move down to $50, where I'd probably start getting interested in selling out of the money puts, because that's the 100 MA and the 200 is right there below there. Microsoft is an example of a exhaustion gap. The stock had moved so far so fast. It to me now looks like it looks like it's trying to bounce a bit, but it looks maybe like it might be a bit of a bear flag. I'd be cautious with Microsoft. I was very bullish on Microsoft, and I said to start booking some profits at the channel high, and that wound up being right around, almost near the high. You got through it on the earnings day, but we've been below it ever since. So I'm a little cautious on Microsoft. If you're currently long, I'm fine with it as long as it holds the 50 MA. Same thing. That has been the support now on the last 1, 2, 3, 4 moves down. I would assume it's support until it's not, and when it's not, just GTFO. This thing has gotten the 1.618, the channel top. I mean, it's just moved a lot. Again, it's a victim of its own success. On the other hand, on the other side of that equation, a victim of its own failure, or Microsoft, I said, was the victim of its own success, but a beneficiary, I guess, would be the opposite. A beneficiary of their own failure would be Whole Foods. They put up a stinker of a number. It just does not. I will say this: I'm willing to cut them a little, and this is why the stock was up today. First of all, they have put in a bit of a buyback, and the stock has been in a very defined, clear range with 27.28 as the support. They may have kitchen sink this quarter. I don't know what to tell you. I do know price action though, and I can tell you that the stock was up on pretty crappy numbers. The 200 MA might be a little bit of resistance. You might want to book some profits into that. I'm short some puts. I've basically, they're a little longer dated. I had closed some of my ones that were near dated, and the longer dated ones, I've just moved up the stops basically to break even, and if I get stopped out, I get stopped out. That would be a little bit more than halfway of today's candle. You really wouldn't want to give more than that up, in my humble opinion. So half of today's bar would be the stop with Whole Foods. Fitbit, this is the problem with Fitbit is I do think that this area around here represents some value. I actually have put on a small long in this stock just because I had projected it would get down to the mid 6s, mid 5s, mid 6s, and now that it's here, I nibbled a little bit. I mean, honestly, if the stock goes to zero, it's not going to do very much damage to me. But if the stock did double or triple, it would be very nice. So I am nibbling a little bit down here. The problem is their business has become commoditized, and their CEO doesn't seem to know how to manage the business very well as far as their inventories and their supply chain. They are doing a lot of sales. To me, even, I have a new Charge 2, actually. I bought the, I think I have the old one here. Yeah, I have my original Charge HR that I'll probably give away, and then I just got the Charge 2. The Charge 2 is a fantastic upgrade, by the way, but I have noticed several times that they've done this $20 off on to buy it. That's actually how I got it. And I cashed in some reward points to get it on Amazon, but that's a whole other story. So it's a great upgrade. It's a fantastic product. The problem is it's become a lot commoditized, and you can buy pretty good competitors for a, I also have the Apple Watch too. The Apple Watch 2. This sits on my desk. I like this in the car. You can dictate texts, by the way. That's fantastic. But anyway, that's a whole other conversation. So, yeah. Fit down here to me seems like it could be a little bit interesting. I don't think that they're going, at least I hope that they're not going out of business. GoPro, on the other hand, is another story. That is a very expensive product, and I've said this for a while. I've been bearish on GoPro for a really, really long time. I'm actually kicking myself about how I traded this stock just this past earnings. I had actually bought it on around 950, and when it had that gap, it wound up gapping like the day after I bought it or whatever, or 2 days after I bought it. I was just playing for a bounce, and my plan was to actually sell it into the earnings announcement. I thought I had good trade location, and I stuck with it, and I wound up scratching it at 960 in the after hours on the gap down day. I didn't even want to give it a shot after that. I was just so disgusted. And now and I said if it loses 960, it's going to come down to the old all-time low, which it did, and I'm glad I didn't lose any money on it. Don't cry yourself for me. I've done very well with this stock. I was a huge bear on it when the thing was $100. So let's not even get into that conversation. But here's the story. Why I hated GoPro back then is why I still hate GoPro now. Although I will say I don't hate it as much now, of course, as I did back then. Although I think the story has definitely anyway. So that's the story. They have a product that is very expensive. Their cameras are like mucho dinero. I think they're between like $300 and $600 or something crazy. How many of those do you need to buy? Will you ever upgrade your camera? Maybe, maybe not. It's not like an iPhone where you get a subsidy or there are really great features. I think most of the great features of digital photography at this point have been discovered. Now they even have the 4K. So I mean, once you buy the 4K, I mean, are you gonna run out and spend $600 for another 4K or whatever, or 5K? The answer to that is probably no. I think most dentists that I know who film their procedures have already bought them, and there's only so many people who are going to jump out of airplanes and film themselves doing it, or ride down, straight down mountains on their bikes. I think that market is fairly limited. It's called the total addressable market, is very niche, and the thing was trading at a very high multiple, and it reminds me a lot of another company that was rescued right at the top by Cisco, which became 100% write-off of $600 million, and that was Flip Camera. I used to have a Flip. I used to like it very much. I don't own a GoPro, by the way. There's not a chance that you're getting me to ever buy one of those, unless it's like super cheap. There's also a lot of competition that's come in with GoPro. That Xiaomi, the Chinese company, you can buy it for like $100. What GoPro is selling for $400. It's ridiculous. And I've actually watched videos on YouTube, and the Xiaomi is better quality. The video quality is better for $100 compared to GoPro. So that to me is absolutely, indistinguishable to better. So that's the problem with GoPro. I also hate their CEO. I hated that he unlocked the stock early, and he even if it was for charity or whatever, he knew what he had. He knew the stock wasn't worth anything. He knew it was going to be worth nothing soon. So of course they unlocked it quickly. If it was going to be such a great stock, why did they have to unlock it so quickly? So once companies start playing those games, it was a signal to me that the stock was going to be terrible. I remember arguing with some friends of mine who told me the stock was going to be the next Apple. I told them, I'll see you when it's in single digits, and it is what it is. So that's the problem for me with GoPro. I know they got their drones out. The news cycle had actually started to become a little bit more positive. In addition to, that was also, I think, why I held it, because the news cycle was improving and the stock was reacting like it wanted to, I think, go a little bit higher. So I lost out on about $1 gain or $1.30 gain. Not the end of the world, but percentage-wise pretty good for a few days. So I was a little pissed about that, but yeah, the stock looks to me like it wants to, at the very least, retest the old low. I don't even think they're profitable, which is pretty crazy. And if we want to do measured moves lower, I mean, maybe the stock is going to get into the lower or mid-single digits. So we'll have to see if it holds 854. There'll probably be some type of responsive bounce there. If not, I mean, there are definitely better stocks to play than GoPro. Someone was asking me about this FAS. I don't like these directional ETFs. I just play them. I just would rather play XLF or one of those directionally. That's to me also in a consolidation issue here with the range. It's been riding the 50 MA, long against the 50 MA, and I guess short below it if you want. And then if you want to add, you see if it holds the 2285. If it breaks, you play for a move down to the 100, which is around 2178. If it gets up above 2387, you just double up the range and assume it's going to bust, take that range from 2387 minus 2285 and just tack on, another buck and change above. It'll probably run another buck. JPM. I think JPM is on its way to 100. I just don't know that it's not going to get a little bit of a pullback before that. Honestly, I would love it to have that kind of a pullback, but I don't know that it will. If it breaks 88, I guess you'd probably see another $5 or so, double up the range. The 1.618 fib extension is up around 99.44. I think it's going to get there. Like I said, I don't know that we're not going to pull back and fill the gap first. If there is a liquidation break, I think that gap would fill pretty quickly. If we lost 8303. So 50 MA and then 8303 are really the keys. So I'll end on one I haven't discussed recently, but I had discussed in the past, and that's the actually, we're going to do SPY last, so this is going to be second to last. GlaxoSmithKline. Someone just typed it and it reminded me because this was one I wanted to talk about. I was bullish on this stock. I sold it at 45. It went up to 45. I think I sold it at 45. And I know it was a 45. It might have been 45 and change, but it was definitely 45. I said that was the channel high, and I thought it would get back down to channel low. It not only got down to channel low, it got really low. I was recently put into this stock actually at around. I still had some puts short around $40, and I had shares. I actually just had them assigned to me the other day, and I was debating on what to do with them. And I said that I was looking at the Fibonacci retracement, and I was looking that we were getting close to the breaking the downtrend. And I said to myself, let's just put a sell order into at 40.40. And it filled pre-market. Honestly, I didn't even realize it filled until I got to my platform today. It had already sold probably while I was still sleeping, or at least not in the trading, not in my fighting chair here. And it gapped up today, and it basically closed on the lows, because I think a lot of people who were in the situation I was, who were still stuck in some of the in shares from the 40s, booked their profits. The 38.2 was 40.40 on the nose. I was actually originally thinking about even holding this the other day. This is actually a really interesting story, and I'll just tell you my feel. This is how I think about stocks. I originally had my sell order in at 41.39, and I think I may have even lowered it to 41. I just wanted that. I thought that would be doable because that's around where the 200 MA is, and the 200 MA to me seemed like it would be important. But I looked at where the last reference swing low was before this collapse, and I said to myself, that's really closer to the 38.2, and that was where this sort of tried to bounce. The last time it came up, there was a day on 11.9, and the high of that day was 40.60. So I moved it down to 40.40, and it turned out to be the right move. Whether it'll turn out to be the right move, in a few days from now, I don't know. But for right now, it worked out well. Again, these stocks have been under a lot of pressure because of the drug pricing. GlaxoSmithKline is one of the best run. They have a hell of a good dividend, and I would be a buyer on dips now. If there was a pullback to the 50 MA, the 50 MA was support, resistance. It seems to have been support again. I'll assume it's support, and it's turning. I like when 50 MAs are going in my way as opposed to going not in my way. So it's looking like it's rounding out. It's also above the 100 MA. I think you could probably play it short below the low of today for a quick pullback, or long above the high where you probably will get that move up to 41. So that's my story on GSK. Let's end on SPY, which I probably should have discussed earlier. What a faux pas on my part. But we'll make up for it now, won't we? So what's the deal with the SPY? So if you watch my weekend review video, this is going into the scenario of breaking out. So the question is today's breakout real or not? My answer to that is I'm going to assume it is until it's not. If you get below today's low tomorrow, it's a look above and fail, and you could short this thing probably down to the 50 MA, which is the low end of the range. If it continues higher, the channel high currently is, if it were to do it tomorrow, 232.55, but my measured move of doubling the range and the bigger, longer-term 1.618 Fibonacci extension takes you between 233.95 and 234.03, so let's just call it 234. That is the potential upside here, in my view, if we double the range and get to the 1.618 Fibonacci extension on a longer time horizon. I had talked about two 1.618 Fibonacci extensions. That's the American 2, and if you want to do the German 2, it's like this. For those Inglourious Bastards fans, 226.53 was one of those 1.618 Fibonacci extensions. We spent a lot of time there. The bigger one, though, is around, like I said, around the 234.03. So today's range is the breakout day. If you get below the low, it's a short. If you stay within the range, it's, you know, a kind of a push to stay long. And above the high, of course, is going to, you know, should continue on. At some point, we all know there's going to be some type of a pullback and correction, but as long as everyone seems to be watching that pot, you know, watching the kettle, it's never going to boil. So that's my view on that. I'm going to end on that. Someone asked about Nike. I'll cover that in the weekend review. My answer to that is you probably want to book a little bit of profits today because it did get a downtrend touch. If it breaks the downtrend, we can revisit that. It'll probably have some legs. That's my story. I'm sticking to it. I have to run quickly, but this video, if you missed any of it or want to watch it again, will be on my YouTube channel tonight. Anyway, Godspeed to you, and I'll see you on Sunday. We have the weekend review. Cheers.